Inflation comes in flat and the markets are freaking out. Let's talk about it. Hello, everybody. Joe Robert coming at you. The PCE index, or the Personal Consumption Expenditure Index, the inflation report that Powell checks to see how the overall economy is doing, has come in flat from January to February at 2.5%. Now, we all know that Powell wants 2% inflation. And the markets aren't really upset that it came in at 2.5%. They're concerned that the core portion of the PCE came in at 2.8%, 0.1% higher than last month. Now, why are they freaking out about this? Their concern is that Powell won't lower interest rates as fast as they were hoping. And as we all know, businesses want capital for free. So they want to see those interest rates come down. On top of all this, Trump just announced a 25% tariff on all auto imports into the United States. Now, none of these tariffs go into effect until April, and we have no idea if any of these will actually be put into place. But again, as I've said before, the stock market hates uncertainty. It hates a future that it cannot see. And when we have inflation staying level, which I think is good, and when we have these new tariffs that we have no idea how they're going to affect the markets overreact and we see a sell-off. So if we get granular, if we just look at what's going on over the last few weeks, we can see the Nasdaq's down nearly 13%, the S&P's down 9%, the Dow Jones is down 7%. But if we do what I tell you to do in every one of these videos, we take a step back, we can see that over the last 12 months, the Dow is still up 4%, the S&P is still up 5%, and the Nasdaq is still up 5%. But wait, if we take a step back even further, we can see that over the last 2 years, the Dow is up 30%, the S&P is up 40%, and the Nasdaq is still up 50%. On top of that, if we look at corporate profits, which at the end of the day, that's what drives this economy forward. Are corporations making money? And my gosh, are corporations still making money? Take a look at this report. Corporate profits in the fourth quarter of 2024 were at $3.7 trillion. That is 91% higher than they were a decade ago. So let's say that these tariffs go into place. Let's say that some of the goods and services that Americans have to purchase go up in cost. And let's say that corporate profits come down a bit off their highs of $3.7 trillion. Off their highs of being 91% higher than they were a decade ago. Not 20% higher, 91% higher. We will still be okay. The markets are still positive. Inflation that's running at 2.5% is pretty much the same as it was a decade ago. It's not at 7, 8, or 9% anymore. It's at 2.5%. Yes, Powell wants 2%. But we're not there yet. And yes, these tariffs could increase the cost of goods and services, and we could see inflation inch up a little bit. That's okay. Inflation between 2 to 3% is something we can live with. Corporate profits of nearly $4 trillion is something we can live with. And a sell-off in the market, again, if you've planned ahead, is something we can live with. None of this is saying that the economy is going to tank. We still have Powell saying that if there's going to be a recession, which I don't believe there is, it's going to be a tiny recession, not a massive one. We still have 280 million Americans who are going to keep spending money, and their dollars are going to go towards those goods and services that are cheaper, which in the end, if these tariffs go into place, that means that the overseas competitors will have to do one of two things. They will have to lower their prices, or people won't purchase their goods and services, or they will have to manufacture in America, which is a positive for America. Yes, a lot of these overseas car manufacturers like BMW build most of their cars right here. Maybe that will force Mercedes to build more cars here, Porsche to build more cars here, Hyundai and Kia and Toyota to build more cars here. And that is a positive for America. But in the short term, it's gonna seem like a crazy idea. In the short term, it's gonna upset the markets and we're gonna see stock markets have corrections. Corrections are healthy. There's nothing wrong with markets that go up and markets that go down. It's when we head into true bear market territory, which is a 20% decline, which we are not there yet. Doesn't mean we won't get there. And just because we get there, that doesn't mean we won't come out of it. Because if you're not retired today, you're okay. And if you are retired today, hopefully you have your assets set up in such a way that you're not spending those dollars or you're not being negatively affected by this loss in the market in the short term. In fact, if you're not retired, it seems like a great time to buy. If we're saying that we can buy stocks that are right now 10 to 13% cheaper than they were a few weeks ago, now might be a time to dollar cost average into the market and purchase something that is cheaper than it was a few weeks ago. But remember, those stocks are still up 30, 40, and 50% from where they were 2 years ago. And I think that is a positive. I think that we get too granular in our thinking. We get too close to what's going on. But if we take a step back, we can see that the bigger picture is overall positive. We're going to get through this. We're going to be okay. If you like videos like this, make sure you leave a comment down below, subscribe for future videos, check out some of my other content, and as always, I'll see you next time.